Hello, my name's Ryan Littlestone from forexflow.live. A big week this week, central banks galore, and one of the big ones obviously is the FOMC coming up tomorrow evening. This is going to be a very, very big event because a lot of the market is now expecting rate cuts from the Fed sometime this year, as early as July. We saw those expectations ramping up over the last week or so, and a bit longer than that, but it's also had a little bit of an adjustment in towards the end of last week because the data that came out, and we highlighted 3 data points last week that would be key for this decision, and all of them came out okay. And so the market has had to reevaluate its expectations somewhat. So we've seen those expectations for cuts fall back a little bit, and we're going into tomorrow with maybe a bit more mixed expectations. Trading wise for this one, I'm currently short bonds, US 10-year bonds. I firmly believe that the Fed isn't cutting. They may indicate that they're going to keep an eye out for the risks that are evolving, but I don't believe they're going to cut, definitely not tomorrow, and I think it's a very, very slim chance that they cut on Wednesday. So I'm positioning myself in bonds, mainly because I think the yields will bounce, and especially in the 10 years will bounce. I think it's potentially the cleanest trade to look at in this one. But another trade we could look at is possibly euro dollar. We've just seen today ECB's Draghi has come out to the conference in Portugal with some very dovish remarks that the market's taken on board. That the ECB are looking at all their tools, and they're ready to almost announce they'll do whatever it takes again to get inflation where it needs to be. And we've seen the euro drop on those remarks. Now, this could potentially give us a trade in euro dollar for the Fed, because now we're seeing the market picking up another bone on rate cuts from the ECB this time. So it's got 2 bones to chew on, one from the Fed and one from the ECB. So we've got the euro now looking like it's going to be firmly within a sell rally phase at the moment. And so what we could get tomorrow, if the Fed aren't as dovish as the market reacts, then the dollar's going to strengthen, and the euro could indeed blast through 111, and that's a fairly sizable level. We've seen decent support over the last couple of months into the low 111s, 111.10, 15 has been strong support. And if the Fed aren't as dovish, then the dollar's going to pick up, and we could see the euro in some real trouble here. Conversely, if they do convey to the market's thoughts that they're going to look at cuts down the line, be it July or even further out, then again we're going to see the dollar sell off, and the euro is going to rise, and that might be a trade to look at. That might be a good fading opportunity, because if we get euro dollar up to sort of the 113 levels, even as high as 114s, which might be a push at the moment, the market's going to switch quickly from the Fed to the ECB, and then that's going to pressure the euro again. So we're not going to see any euro rally last, and those gains will evaporate. So that's one trade to look at from that side, from that point of view. If we do see a good euro rally on the back of a Fed, obviously depending on what they say, then shorts are going to be the way to look forward to that. Otherwise, it could just be a one-way trip for the euro here, and we could be down to 110 pretty fast. The only caveat I would suggest is that we are seeing the market swing, to very big extremes when it's deciding on these expectations for rates. We saw it with the Fed. We're possibly going to see it with the ECB and the euro. So just keep an eye out that these expectations aren't getting into silly territory. It's not going too far extreme. So that's my view of the Fed and the ECB, and also euro dollar, and a couple of trades for you to look at going into the meeting tomorrow. So the very best of luck to you.